Rates are good. Pretty exciting.
You know why? Right.
Free money. You understand what I'm saying?
Hey, thanks for staying with us. Welcome back to the program. This is your Real Estate Shock Talk. 612-627-8000. 612-627-8000. The Money Man's in the studio, like every week. Kelvin, what's going on with the markets?
You gave a nice teaser at the end of the last segment saying rates have dropped, but you were lying.
Oh, no. I thought they did for sure.
You've
been telling me since May that they're going to...
May 10th.
May 10th.
They start turning around.
I must have the wrong year.
Yep. Hey, that's it.
That's it. May 10th of 25?
24.
Okay.
We'll be good. No, so rates just continue. You know, we didn't see a lot of up or down movement this week. It's just staying steady, but you're mid-sevens, pay, and that's with a point discount. So, yeah, you can't get a par rate hardly anymore. So you're always paying for your rate. They've got to open the 8% tranche. They haven't yet.
Do you think that when the Fed's going to raise their rates again?
They say that, everybody's starting now to price in another move.
Another move?
Yep.
So where does that put you? Where do you think that's going to put you? You think we're going to see 8% by the end of the year?
We're 7.99 now.
Okay, so that'll be we're going to be in the eights.
Yep. And every prediction shows that we'll be, high sevens, low eights until the end of the first quarter now. We have Barry Habib, who is kind of the guy we listen to on a lot of this. We have an hour deal with him today. So I'm going to put a bunch of stuff out today on where things are going. But he's also the one that said May 10th we're going to start to see things shift and move, and then they show the 100-day average, 200-day average, this, and then it doesn't happen. Then they're just like all of us, and they go, we've never seen this before. We just don't know. And that's the thing that you just kind of go after a while. You just go, I don't know for sure. I know they're going to come back down. It's a matter of when. Quite honestly, I think we got to get in closer to an election cycle so that...
You think the Fed then will start buying mortgage-backed
securities
but they'll stop,
again? No, I think they're just going to stop. I was going to use the wrong word. They're going to stop messing with it.
Okay.
Just leave things alone. Let the market dictate where we should be instead of everybody having their hands in the pot. They made money too cheap for a long time,
right? And
now they're making money way too expensive. Leave it alone. Let the market dictate where it should be. Because right now, rates should be, because I had 7 corporate people out this week and they're doing their dog and pony, and that's great, but I kind of hate that stuff sometimes.
Yeah.
But it's still good. But they're talking like if you just left things alone, rates would be high fives right now. But the Fed's overinflating because they're trying to slow down the economy. They were under, it's just like leave everything alone. Things will be okay, and rates would be mid to high fives, and that's kind of where I think we will get back to. But it's frustrating.
It's very frustrating.
One of the things we're telling people, because we got, we're getting people getting stung on this, you got to get pre-approved. If you haven't been pre-approved in the last 30 days, you got to get pre-approved again. Because when you got pre-approved and the rate was 5.99 then 6.99, now it's 7.5. You got to make sure, like if you're tipping,
right,
you might tip over and go,
I can't afford it.
You can't afford this house anymore.
Right.
You just can't afford it. So that's one thing that we have to make sure we talk about. The other thing I just want to put out there that you talked about in the first segment is just we are seeing that increase in credit card debt. We're going to see the short-term money getting used up because everybody got used to living on some sort of retainer from the government, like, oh, it's COVID, or we feel bad for you this way, that way, here's some money. And everybody just starts spending. We're still doing it, and things have slowed down. There's going to become that tipping point, and now we're already seeing cash out refinances to pay off credit card debt right now, because you go, hey, cash out refi 8%, 7.99, that's super high. It's not nearly as high as 29%, which is on your freaking credit card. Pardon my language. It's on your credit card now. Rates are going through the roof in every arena, and people don't realize it. They're doing their minimum payment on their credit card and don't realize that they're getting charged 27%. So there's going to be a shift in a reckoning going, you know what? I've got to give up my 3.5% rate, my 4% rate, because you know what? 4% here, but 25% here.
On a maxed out card.
I'm never going to get out of this. So I'm just going to, and I have equity in my home because there aren't homes. You know what I mean? So there is so we're looking at that going, okay, and our corporate guys are just saying, hey, hang in there, right? We have $1 billion of cash. We can run. Everyone else is going to, I mean, it's tough sledding for lenders out there. We've talked about this in past. I've been doing this 21 years, and there's not one company that still exists today that I worked for, other than Loan Depot, which is the largest lender in the country. So that's crazy, right? They've all sold, they've renamed, they've done this, they sold out to the big companies, because you just cannot be a small shop anymore. So that's going on. VA, if you're a veteran, make sure you talk to us, because we have no lender fees now for veterans. We also have an employer. You should do this for your employees. We have a program now where 0 lender fees when we have a corporate program set up, and it's just a benefit. So you can just say, hey guys, we have this benefit through Loan Depot. You don't pay any lender fees. Just talk to my guys.
This is for buying a house.
Mm-hmm. Yep, for buying a house. So if they want to buy a house, no lender fees.
I wish you loaned other money.
Trying. I'm trying.
Okay,
I know
right.
you need money on other things, but
yeah, I wish you did equipment loans.
I know.
That'd be so great.
I was actually looking into that because I know you need it. So anyway, that's what's kind of going on in the mortgage market right now, and it's a good time to be in the business. It's always fun to have conversations. It's just, it's different. It's counseling, right? It's coaching. It's consulting. It's making sure people are really prepared. And it's discouraging sometimes, and it's encouraging sometimes, because people are going, "Oh, good, we can get in." There's some good programs out there. So,
well, the good news is that people still live their lives.
Yep.
And our business is based off of lifestyle. Mm-hmm. And they get married.
And life stages, right?
Life stages. They get married. They get divorced. They have kids. They graduate from college. They form households. They dissolution households. All that stuff is money in motion, and people have different needs based on whatever stage they are in their life, and they're gonna move towards that housing style that better fits their current lifestyle. It's just the way it is. And, the days of speculation are probably out the window for some time, and I think that's good.
Yeah.
That's a good thing.
So I want to shift back to Mike here real quick. Okay. Continue talking a little bit about the coaching that you're doing, and what has been a benefit from you that you've gotten from it. You say it's awesome, it's great, but that doesn't really help me.
I'm curious about personally growth, your personal growth.
I'm curious how you got your head set
that's
to look
interesting.
That interesting.
Okay, that's it. That's a whole that's a big one, man. That's a big one.
We
won't go there.
Minutes.
We won't go there, but I would love to have that conversation. So here's an example. We've always been an advertising organization, right? Advertise. So we run an ad, people call, we go out, we give them a price, and there you go. Okay. We've never been a sales organization, right? Well, now we need to learn how to sell. We need to go to commercial accounts.
Okay.
We need to go find
business
the business.
to business. It's
right.
different.
We need to find it, and then once we find it, we need to be able to put together a powerful argument, right? Okay. Start that from scratch.
Yeah.
Okay. Now, so this guy, we have one-on-one meeting. There's 3 of us that are selling: Maddie, Jamry, and then me. And I sell snow and Christmas lighting, and mine's the best because it's a short little window.
Okay.
And those are all other year-round things. What CRM do you use? What indicators do you use? What measurements? What reporting? How should you make your phone call? I mean, okay, come up with all those answers, right? Read a book? Again, I can't do it. So we got a guy, 1 hour a week he spends with each of us for a whole hour on Zoom. He's from Boston. Guy's the most amazing guy. He's unbelievable. I mean, it's indescribable. And then we have a group meeting where the 4 of us.
And where'd you get him? Where'd you find him?
I went to Milwaukee and I said, I need somebody to teach me about snow.
You went to Milwaukee. What's that mean?
Well, they had a convention there.
They
had a convention there.
Okay.
And I'm walking around, and then he goes, oh yeah, and I was at this weird dinner sponsored thing, and I'm telling it's like I need a guy, and they go, oh yeah, there's a guy named Neil. He's going to be at someone's booth tomorrow. And I go down there's Neil, and it's not even his booth. And I say to him, I need help with this. He goes, Mike, I'm it. I'm the guy. And I said, no, Neil, you need to understand something. I know nothing about this. Nothing. He goes, perfect.
Yeah.
Because then you don't have to learn any bad habits.
You don't have to unlearn.
And And so he has these events, and he's got a partner named Phil, and I've even put Phil on retainer.
Okay.
I'm not doing any more of this stuff on my own. Somebody's going to tell me what to do. And it's just
tell me what to do and I'll do it.
Money in the bank, it's probably going to be a 10-to-1 return on investment.
That's so great.
Yeah, and everybody,
Well,
my
I'm
customer wins.
We're going to have you back because I'm curious now. You got my curiosity piqued about your personal growth.
Oh, yeah.
As a result of all this. This is your Real Estate Chalk Talk with the Hittner Group. HittnerGroup.com, HITTNER Group, all one word. Thanks, Mike.
Yeah, no, you guys are always great.
612-627-8000 if you want to chat about buying or selling some real estate. If you need money, call Kelvin, 651-231-2500. He'll coach you through and give you some options. Mm-hmm. That's what we love about him. He gives you options so that should I do this? Should I do that? What's better for me? Everyone's different. Everyone's situation is different, and you treat people as individuals, which is
with respect.
With respect.
Look, and if I could say, there's a trust thing with Kelvin. Mm-hmm. It's like I get so many offers for money on these different things, and it's like, oh no, I don't trust them.
Yeah,
I just need somebody that will tell me the truth.
That's right.
Yeah. That's why you need to do this.
We'll see you next week.
You've been listening to your Real Estate Chalk Talk.